Okay, we're live, but that's because it's private. So let's see if I can fix this. Okay. I think this is working. Awesome. If not, that's okay too. I'm Tyler. I'm doing a speed run of the new big, beautiful bill that was passed on July 4th. Just thought this would be fun. I like watching speed runs, and honestly, I wanted to read the bill in its entirety. So, yeah, I figured I'd stream it, throw some comments out there, see if it helps anyone. So let's get into this. I'm going to share my screen. All right. So one thing to note is that we're only going to be reading the finance section, specifically the tax section of this, because I don't want to read 870 pages today on a beautiful Sunday in Seattle in the summer. But again, my hope is that this helps someone out, learn something. I definitely know I will. So, okay, we're going to count it down. 3, 2, 1. Interesting. I'll probably just drop some like highlights and stuff as I go through, just because I think it's interesting. I know this part has been interesting for a lot of people. Before 2029. 6K. It's pretty good for the seniors. I'm sure there's some rules to it. $65. Spouses attain 65 or younger. Okay. Hmm. This is just good to know. 6%, essentially. Just talking about MAGI, modified adjusted gross income. Hmm. You can see there's just like a lot of legal jargon in here. For a lot of people, just like reading a summary is fine, or reading your favorite blog or newsletter. For me, since I have a background in research, it's just fun to actually read the code as it's written. But that's not the case for everyone. Sometimes I question my own enjoyment of it as well. This is nice. Essentially, it'll start up in 2025, these senior deductions, but we'll see how that actually works out. This is good. So that's going up. Again, legalese. Looks like you have to have a social security number, which was the case for the child tax credit in the first place. So this is always interesting when you get into like immigration politics and stuff like that. How these credits only benefit certain people. Inflation adjustment. It's always good to see. Same thing with the seniors starting up in 2025. Oh, sure a lot of people are excited to see this. Okay, so it's going up to 75 and 150 for joint. Essentially, they're probably just bumping up those thresholds. Minimum deduction. So I've heard a little bit about this $400 deduction they're giving. It'll be interesting to kind of see how that works on the form. I think it's like 89.95 or something like that. I'll have to double check later. So you have to have qualified business income of at least $1,000, which makes sense. State and gift. That's always good to get into. It doesn't affect everyone, obviously. You know, you see something like $15 million, you might think, "Oh, I'll never have to worry about this." But it's good to have a good understanding of a state and gift tax, even if you know someone like me who's like, "Well, that is a crazy number. Why would I ever care about that?" But there's things that fall into even just annual gift giving that kind of can dig into that estate deduction for people when it comes to long term planning. So I would say never write off reading through an estate and gift tax section, especially when it comes to like lifetime exemption amounts. This is interesting. Will definitely be a change. Casualty losses. It's just an interesting section, especially seeing, even just in the US, things that happen, fires in California, all the terrible things that happen with all those floods and storms and places across the country that are still having a hard time building back for a variety of reasons. Um, these casualty loss deductions are actually helpful. Some of the rules are kind of outdated, in my opinion. Hmm. So you'd want to know what Section 67G is to kind of get an idea of what's going on here. So you'd have to do a little bit of research. Nice that coaches are now going to be included into educator expenses. Get the opportunity to utilize some of that stuff beginning after. So that's not going to hit till 2026. Hmm. Let's go gambling. Hmm. 90%, huh? It's just always good to know for anyone who's into gambling. Only the extent of gains earned can you take those gambling losses. Now there's a 90% limitation on savers credit. Looks like it's going on. Hmm. That's nice. It's a big one. A lot of people with serious state tax implications. It's a pretty big jump, you know, pretty big. As always, sort of phase out 30%. And there's a threshold amount. So yeah, that's good to know. I mean, a lot of things in that first chapter. I'm probably not going to take too many notes, honestly, just because I'll go back through this again when I'm not on a stream. Um, but some of the interesting ones are the qualified business, senior deduction. Yeah, I think those are kind of two interesting ones for now. Obviously, state tax updates. That's probably good. We'll come back for more later. All right, on to chapter 2. Let's go. Making good time. Middle class. Let's see what's going on. All right, no tax on tips. I will say, like, this one is super interesting. My brother works in food service. I have a lot of friends who work in this industry, and it definitely can be something that will help significantly. But there's always weird rules around tips in restaurants in the first place. And it'll just be very interesting to see how employers react to this because people are very creative. And I have a feeling that people will do some super interesting things. And this will probably be a point of contention between, federal, local governments, state governments versus taxpayers. So it'll be very interesting to see. So it's like 25K is the deduction you'd be able to get, which I think you wouldn't even need to itemize your deduction. Probably most people working in food service wouldn't be itemizing in the first place unless there's a lot of other things going on in their personal life. So if you're making over 150K single, 300K married filing joint, it's going to be phase outs probably $100 for each $1,000 beyond that. So here it's just telling you exactly what qualified tips are. Here's what they're not. Again, I think there's going to be a lot of extra information to come out around this since this has been such a big talking point. Yeah, see here, Social Security number required, same thing with that child credit, can really stick people who don't have a Social Security number. Um, yeah, and I won't go in too much on the immigration policies, but people who have like a what is that? I think a I-10, uh, that won't count as a Social Security number, meaning a lot of people who, yeah, if you don't have it, you won't be able to get out of these tips, this tip deduction here. Yeah, see, here you go. So they'll put out some regulations on this to prevent abuse. They say it'll stop in 2028, so we got a couple of years. Yep, on itemizers. That's nice. That's excluded from QBI. Beauty. Let's go. All right. Quick break. We're back. I think this makes sense. Right? Tips are interesting in general, on top of the tip rules, but then all how it's really reported and the accounting for that by the business. It's interesting. I can tell you from personal experience, when people don't do a good job, employers don't do a good job with tips, it really screws some people over, especially the people who need those tips the most, which are a lot of these people working minimum wage jobs trying to get by on tips. Hmm. That's nice. So update the withholding. So people will get more in their paychecks essentially. It won't come back at filing of the return, which is nice. Give people that money all year long. Nice. So this will start right in 2025. Right now. That'll be interesting. See what they say here. This is another popular one. Let's say tax on tips, tax on overtime. Both interesting things for sure. Again, curious to see how this is going to pan out with employers' reaction, because all this stuff is just a battle between governments, employers. Employers do something, government responds, and along we go on this wheel. Okay, I think that's the same as the tips one, so that's pretty big. Again, another place where you'd have to go out and take a look at the Fair Labor Standards Act of 1938 to really understand what's going on here. This definition of qualified overtime compensation. I just do my own research on that. Yep, you guessed it. Also nice again that people can actually take advantage of that. I think I heard in here that there's going to be a section on charitable deductions, and for at least the last little stretch of time, last couple of years, people haven't been able to utilize that charitable deduction if you haven't been itemizing, which again, most American taxpayers are not. Um, so seeing something like this is nice because it actually means that, yeah, here's a benefit and you can actually use it. This will be interesting. We're going to have to update the Gusto ADP accounts, make sure that these W-2s are calculating correctly. So we'll see how all that goes. Same section on the withholding thing. That's good. Starting in 2025. Approximate. Huh? Well, that'll be fun. So we'll see. Another one. No tax on car loan interest. We'll see if how this is treated. Personal interest shall not include qualified passenger vehicle loan interest. Okay, interesting. 10,000 bucks, and then it's going to get phased out. 200 bucks for every $1,000. So smaller amount than what we saw for tips and overtime. Some more definitions. Oh, this is interesting. Final assembly, what's that? It's gotta be in the US. I worked as a car salesman for a summer. That was an interesting experience. Actually, I loved it. Pretty terrible at it. I was in college. Um, I learned a lot about Hyundais. That was cool. Most of which are not finally assembled in the US. So it's gonna be interesting to see what auto manufacturers do surrounded around this. I mean, it's not a long window on this. I think it said it ends in 2028, so wouldn't see any, wouldn't expect any big changes on this, but maybe 3 years. And there we go. That's what I was hoping to see. People actually get to utilize this one too. Again, we'll look and see what they do under the regs. Get some additional clarification. The Trump accounts. Let's see what this is all about. An IRA, not a Roth. What is not a TANS? You got to be under 18. Funded by qualified rollover contribution. Interesting. Same thing here. Social security number. No deduction for contribution. Makes sense. Can't put in more than 5 grand a year, I guess. Probably unless you do some other things. I'm sure there's a way to get more in there. A cost of living adjustment. Hmm. I mean, this is interesting. Maybe a good way for people to stock money away, especially if you have a kid under 18. I'm gonna have to do some more reading on this, but definitely interesting. This part I think is really interesting. This pilot program. So you get $1,000, I guess. This will be interesting. Just seeing how claims for this are going to go. Always interesting when it comes down to married filing separate parents or parents who have separated. Claiming for things like this will be very interesting. All right. Okay. Chapter 2 is done. On to chapter 3. Crushing this. The world record's coming. Full expensing for certain business property. Looks like they're just making a lot of stuff permanent that people were worried were gonna. I mean, technically, yeah, a lot of these provisions were sunsetting coming up. So the fact that they're making them permanent extends that runway. Let's go, plants. Massive, absolutely massive for tech companies in the U.S. Caused a ton of headache for companies that were honestly almost pre-revenue, and they're like, "How the hell am I supposed to pay tax?" This Section 174 business has caused a lot of headache, and so really glad to see that this is getting called out. Interesting, obviously domestic though. There's a provision. It's treated differently for domestic and foreign. So, if you do your R&D, let's say you're a software company, your R&D spend is based here in the U.S. It sounds like that's going to be a lot more favorable to how it's treated outside the U.S. Well, let's read through it. If anyone has R&D questions, I'd recommend Carson Grader, CPA at Baker Tilly. Dude's the man. Knows everything when it comes to R&D. Other than foreign, yeah. So they're excluding foreign. Foreign will probably still be treated the same way, where you got to amortize it, capitalization, amortization of it. Nice. The R&D credit under Section 41, which is different than the R&D capitalization under Section 174. Credit's always been domestic. You couldn't include stuff that was foreign anyway. 174, it was all thrown in. Makes sense. Nice. So you might not have to do a method change, which is good. Method changes are always difficult when it comes to tax returns. They're costly and easy to mess up. Ooh, so it looks like you can make this retroactive back to 2021. That's nice. That's really going to help out some people to go back and amend some of those tax returns. Who's eligible? Let's see. No tax shelters. Sorry, guys. First receipts test under 448C. Interesting. I bet it's probably pretty big, so it's probably going to help a lot of people out. That's awesome. Here's what I'm saying about the method change. Sounds like all you got to do is drop in that election. Awesome. 163J is another one that's interesting and actually dings a lot of people. I'm curious to see how they updated this. I mean, not really a lot of just businesses and how they can deduct their interest. Fishing boats, good for you guys. What a win for the deadliest catch crew. Section 179. Nice. They're just trying to stimulate people to buy more equipment and get it going. Businesses can take an immediate write off for it as opposed to depreciating it over time. I'm sure there's some bonus in here as well. There you go. 100%. So a lot of those things had been a tier-based sunset over the last couple of years, where it was 100, went to 80, went to 60, and they wanted to phase it all the way out. Well, it's gone, but it sounds like now they're pumping it back to 100%. So for a lot of business owners, if you buy credit, you can immediately take bonus depreciation on some of those purchases you've bought on some bigger property, depreciable assets. Recapture is a good thing for people to understand. Anytime you sell property that you took bonus on, you have to recapture that benefit so that way you don't get double dipping your benefit. Especially anytime you're selling property for money. If you were just disposing of it, that's one thing. But if you sell something, you get something for it, then you'll run into recapture, which can trigger some gains at ordinary rates as well as opposed to capital rates sometimes, depending on 1245, 1250 treatment. All right, so now we're kind of getting into some the international portion, foreign tax credit. I'd always encourage any businesses that have any sort of international exposure to talk to a CPA, just because a lot of the penalties around not filing your international forms, even just the informational ones, can be staggering and it can be um, pretty massive for people. So anytime you're hiring people who live outside of the United States to do work, you sell your product outside of the U.S., advertise your product outside of the U.S. Definitely something to kind of consider. That's where foreign tax credit comes up. Even individuals will have foreign tax credit. If you have investments and you're invested in stocks outside the U.S., you could be looking at a foreign tax credit as well. CFC, controlled foreign corporation. Did a lot of that at my previous job and get PTSD looking at that word. Oh yeah, interesting. got one right now. Definitely encourage a little bit of stretching, some breathing, squats, whatever it is. Hope you don't mind. Try to promote some good blood flow. Good for the brain, good for the body, good for the soul. Pro rata for subpart F doesn't apply to a lot of people, but again, if you have a lot of business outside of the US, you will know about this. All right, chapter 3. You're done. On to chapter 4. We're cruising, baby. Employer provided child care credit. Great. Looks like they're bumping up the threshold, creating an inflation adjustment. Dropping down 5 years to 3 years. Adoption credit enhancement. That's great. Phase out. Feel like this is getting into 529 area. Looks like elementary and secondary education scholarships are now going to fall in there, which is nice. Here's your 529. So yeah, elementary and secondary tuition now you could throw in there. I guess just means you can use like utilizing a 529 plan for kids to go to college. You can now use it for more than just college, elementary and secondary education, which is nice. If you're going to stock money away for school, you might as well be able to use it. Give people more options. It'll just be interesting to see how the state of school continues to change in the United States over the next generation or two. Fascinating time, huh? For these colleges. Wow. 1.4% on investment income for smaller schools, looks like. 4% for the slightly bigger, and nice 8% tax on the endowments. 2 million. So it looks like Trump held true to some of those promises when he was coming at schools. Probably not too happy. For real estate developers and folks, looks like they're expanding on these opportunity zones. It's like they're taking up these roles for Puerto Rico. Puerto Rico is an interesting place when it comes to taxes. A lot of stuff there for people who are really trying to push the limits of the tax code to understand the relationship between the U.S. and Puerto Rico and how that kind of works out. Very interesting in terms of tax planning, the opportunity there. All right, so we're kind of in a section there that didn't apply to most people. This definitely applies to everyone who gives charitably. Kind of mentioned it earlier in the stream in the past. A while ago, you'd been able to take $300 for a charitable deduction, even if you weren't itemizing. 600 for married filing joint. That was taken away for a while. Now it's back on the table. So even if you don't itemize your deduction, you take your standard deduction. You can now take $1,000 as long as you're giving to a legit charitable organization, and 2,000 if you're married filing jointly. Beginning after 2025, though, so that won't impact 2025 taxes. That'll be 2026. There's definitely a floor, so that makes sense. So corporations have a 1% floor. Looks like for corporations, you get a 5-year carry forward. After that, it's gone. If you can't use it, you lose it after a while. And those are always taken into account while looking at net operating losses as well. Those are treated differently, and there's ordering rules on how those are taken. Interesting. Hmm. If you work in construction, you don't know about different rev rec requirements, including completion method of accounting. That's a big one. Qualified small business stock other than a corporation. Makes sense, right? It's got to be a person who owns the stock, not a corporation. So this looks like a pretty big change to how it was. It used to be you started a company, corporation, and you fall in the rules of this small stock gain exclusion. You could exclude the gain you'd have to wait 5 years. It looks like now you don't have to wait the full 5 years. It looks like there's a tiered approach between years 3 and 5. So that's pretty cool. Makes it more enticing for a company, especially like a tech startup, want to go out, become a corporation, like, man, now I only need to hold on to the business for 3 years before I can sell to get at least half of the gain excluded. And here it looks like if you hold it for 3 years, you get half the gain excluded, 4 years, 75%, and then 5 or more years, 100% of your gain excluded. It's an amazing planning opportunity for US based companies that want to have a quick exit. That looks like now it can be quicker. In the past had to be 5, now you can have 3 years. But there's still rules around this. Who qualifies? Going up from 10 mil to 15 mil. Then there's an inflation adjustment. And then you have a limit. QSBS updates. That's cool. It's like the qualified sound recording production. Back in the mix, baby. Looks like there's some changes to how interest is going to be treated for agricultural property. That's cool. Transfer tax for guns. Okay. Chapter 4 done. On to chapter 5. Yeah, these electric vehicle credits are gonna get hit pretty hard. Testing, that can be tough. These are all getting slashed. Commercial shipments. All right, chapter 5, green deals are left. All right, the last chapter. Let's bring it home. Excess business losses. Remittance. Or retention credits. Finally, come down on all these grafters. Wow, $1,000 for each failure. ERC mills are in trouble. If you want to know what the due diligence rules are, you can check here. Again, Social Security number. They utilize a lot of these credits. Typically, in the past, you could use, I thought, the lifetime learning credit if you didn't have a Social Security number, but not the American Opportunity Credit, which seems to be the case. Not sure about lifetime learning. That might still be the case. This might be changing that. So, if you dig into that, okay, that's it. Done. 1 hour, 27 minutes, 13 seconds. Um, yeah, there's a lot there. I think this will be really interesting to just see how it plays out. Again, like this is just step one. Now that this has been signed in, some of these regulations that'll come out will be very interesting to see additional guidance. But now it's kind of in the hands of businesses to see how they're going to respond to this, what case law can be levied, and see how to put yourself in the best position available. Um, to me, these were the big ideas here, but depending on who's reading this, they'll probably get a whole different set of big ideas. So, yeah, this was long, but my hope is that this helped a little bit. Cool. Thanks for tuning in.